Right now, we can't help but see next year in South Korea as very bleak, given the current situation. It might be better if an AI were the president. I really think it would be better if an AI became president. Really.
Hello. Nice to meet you. This is Dr. Kim from Richgo.
Hello, this is Kim Ki-won from Richgo.
There's a red flag raised regarding the credit ratings of our country's companies. Global credit rating agencies, S&P and Moody's have been sending warnings about the South Korean economy and its companies. In this video, we're going to share an understanding of the current state of our economy and why it has come to this.
That's right. Again, this was the original situation, and now martial law.
The filming day is December 5th, and just 2 days ago, the night before, it was really shocking. I hardly slept at all. I really didn't sleep well at all. I don't think I slept at all until 3 a.m.
I mean, this isn't the 1980s. And here we are in 2025. What on earth is going on? It's really shocking. I was really surprised too. But today, let's talk about what's going on. The situation keeps getting worse. So, exports are still under a dark cloud, and now exports to the US and China have both turned negative. This is the export growth rate. As you can see, the export growth rate was 13.5% in July. It's now up to 1.4%. We're almost at the negative point right now. So, now, Trump has been elected president. He's threatening to impose tariffs on China, Mexico, and Canada, which is casting a shadow over our country's exports. What does that mean? The situation for South Korean companies could get really tough next year. So, what does that mean? Next year, the credit ratings of South Korean companies could decline. It could get worse. This is what we're talking about now.
What I'm worried about is that exports make up a huge part of the South Korean economy. Of course, South Korea's exports, it's a bit concerning to see such a shaky standard.
That's right. So South Korea is a country that relies heavily on exports. Imports are the same. Both imports and exports are highly dependent in this country. But the fact that companies are in this situation means that 2025 could really be very tough. Domestic demand is slowing down, and the business environment for companies is completely worsening due to unfavorable supply and demand conditions in the private sector, as well as uncertainties regarding policies. So what does that mean? The proportion of negative rating outlooks is also continuously rising. So it was 5.3% at the end of last year. Do you know what percentage it is now? Yes, 18.4%. How much has it increased? It's increased more than 3 times, from 5.3% to 15%. So the proportion of very negative companies is now at 300%. In percentage terms, it's really a very dangerous situation. Some companies like SK Hynix and Hyundai Motor have seen upgrades, but companies like LGN Solutions, LG Chem, Hanwha Total, Doosan Babcock, and Babcock have been downgraded. So right now, secondary battery, iron ore, and petrochemical companies are facing the biggest downward pressure. I was also surprised by companies like Costco. They say they've closed the factory doors the first time in history. It's so serious that they're closing the factory doors for the first time on the anniversary of its founding. Steel, secondary batteries, and petrochemicals are really in a dangerous situation right now. I think you can look at it this way. And if you look at this, there are some key indicators pointing to South Korea's credit rating monitor for next year. What is this? The price increases and the shrinking roll margins in the chemical and steel industries due to supply and demand in China are key monitoring indicators for whether South Korea's credit rating will improve or worsen. And with the domestic slowdown, the reduction in corporate investment is also almost certain. And with the domestic slowdown, it's almost certain that companies will cut back on investments. Almost no investment. About 10% of companies are saying they won't do it. And the policy uncertainty following the election of President Trump in the US. So, these factors make it impossible to see a bright outlook for South Korea next year.
We have now evaluated the negative credit rating given by S&P, but it's not just that. Moody's also rated us poorly.
Credit ratings in South Korea are expected to decline. Next year, worsening situation. So, Korea will continue to get worse until next year. It seems that global credit rating agencies are currently making these assessments. On top of that, because of laws like the Inflation Reduction Act, the CHIPS Act, and semiconductor support laws, South Korea has spent a huge amount of money. So, where have South Korean companies built their factories? They built factories in the US, right? The dollar is going up. Yes, that's right. So, the jobs that should have been created in South Korea are now being given to the US because of the IRA and CHIPS Act. But now that the president has changed, what's going on here? Trump, who could be out of the picture, is not your average person. So, if it gets to this point, what's going on with the president?
I'm sorry. I guess I'll just laugh without knowing.
I really think that, wouldn't it be better if an AI were president?
That might actually be okay.
I really think it would be better if AI became president. I hope it can create such an AI. So, this has a huge impact on the creditworthiness of South Korean companies. I see this as a very significant issue. Next, the revision of the commercial law is hindering corporate activities. If this becomes a reality, the South Korean economy could fall into a crisis. It seems that various global credit rating agencies are expressing a lot of concern about the South Korean economy and South Korean companies right now.
So, you mentioned that the creditworthiness of South Korean companies is declining. What exactly can we interpret when we say that creditworthiness is declining?
It's like this. For example, you have credit ratings too, not just for companies. Now, it's changed from credit ratings to credit scores. What are the benefits of having a good credit score? You can get a lot of loans from the bank. You can get a lot, and the interest rates are low.
And the interest rates are low.
But my credit score isn't good. So what happens then? If your credit score is low, you won't get much in loans, and the interest rates will be really high. So, it's the same for companies. When a company's credit rating drops, it's just like an individual's credit rating dropping. This means that the prices of the bonds they issue will fall, which can become a hurdle for raising funds. If you can't trust the company, how can you lend them money when you don't know how they're going to fail? And even if they do lend money, interest rates would be really high. They also raise funds through private placements or corporate notes instead of bonds.
So there's a big concern that things could get worse. So how many companies had their credit ratings downgraded this time?
Oh yes, if you look at this during the COVID period, it was really risky, right? So during that time, there were 18 companies whose credit ratings went up, but 28 companies had their ratings drop, which wasn't good. But in 2022, there were more companies that had their ratings go up than those that went down, with 33 companies improving. Then in 2023, it was the same. But now, in 2024, things have gotten worse again. So, there are only 11 companies whose credit ratings have gone up, while 17 companies have seen their ratings drop. This is based on data to November 19th, 2024.
So, which sectors do the companies that have seen a decline belong to?
Yes, if you look at the sectors here, the petrochemical industry, securities, savings banks, and construction are definitely the sectors with negative outlooks.
The finance sector, construction, sector petrochemical. There.
Yes.
Anyway, companies need to come up with measures, right? Since you felt a sense of crisis, I guess we have no choice but to do it.
Right now, we're all tightening our belts, aren't we? Companies have no choice but to tighten their belts now. Because when your credit rating drops, it means I'm no longer in a good position to raise funds. It's not a favorable situation to be in. So, what do we start with? We have no choice but to start with restructuring and tightening our belts. Of course, they're trying to cut hiring significantly. As a result, 61% of companies are going to tighten their belts next year. Even large companies tightening like this means it's really tough, right? This is what we're talking about right now.
Even though they are large companies, the fact that they are tightening like this means we can interpret it as really tough, right?
Yeah, it's really tough. So many companies currently going through restructuring. And it's not just small businesses. Even large companies are really struggling right now. I have friends who work at large companies and it seems like the atmosphere is really bleak right now.
Some people are only getting 50% of their pay, and even though everyone can't say it, I think they're feeling frustrated. That's right. First of all, the economy isn't good. It's unstable. But despite that, it's really unfortunate and upsetting that something like a nuclear bomb has happened. We've also faced political instability. There will definitely be aftershocks from this.
I was really shocked. This is something that was completely outside the scope of what we thought could happen. Right? It wasn't even on our radar for the future. 99.9999% of people in South Korea probably didn't even have the term Gaya-Yum incident in their heads. What is Gaya-Yum anyway? They might have asked that. It was something that big data couldn't even predict. But on that day, the stock prices did drop quite a bit, right? They probably didn't even think to ask about it at all. It's something that big data couldn't even predict, but on that day, the stock prices did drop quite a bit. But it didn't drop as much as expected. The agreement has been made, but it did drop. It dropped, it was okay, but dropped again. There will be aftershocks. Global investors will be cautious about the Korean market, the aftershocks of the Gaya-Yum incident. So, global investors are likely to keep their distance from the Korean market. They're saying that the likelihood of this happening is high. So, with the Gaya-Yum incident happening, the credit rating isn't good, and we're already in a tough situation. The incident has led to a decrease in trust in the Korean financial market and increased volatility. Some are even mentioning the possibility of a downgrade in the credit rating. And they said they would eliminate the Korea discount, but right now, it's not a value up, it's a value down. That's right. So, right now, the joint agreement is on the verge of collapsing. I find myself sighing without even realizing it. So, trust in the Korean market has taken a huge hit. It's like throwing chili powder into an already struggling Korean asset market. This is also going to affect the real estate market. Yeah, after this happened. There are a lot of people saying that the real estate market is done for. But the real estate market isn't ending because of the Gaya-Yum incident. The situation is so serious right now that I have a very bleak outlook on the real estate market in 2025. I'm especially worried about the second half of 2025, which I think is going to be particularly risky. And especially for those who are interested, I'm going to be giving a free special lecture on December 17th. I hardly ever do free lectures. So if you're interested, please make sure to sign up. There's a pinned comment below, so it would be great if you could check that out. Now getting back to the main point, ING mentioned that even after the lifting of the martial law, the situation is still fluid because this isn't over yet, right? Politically, we can't help but expect a very unstable situation to continue, at least until the first half of next year. So, with the economic uncertainty in Korea, combined with political uncertainty, the country's credit rating could change. There's a lot of concern being raised right now. So, right now, we need to work hard to defend ourselves in Korea. So, we will continue to work hard to stabilize the financial market. So, we will mobilize funds to stabilize the stock market. We've prepared for this. So, while we're working hard on this, the dollar at one point went up to 1,141 when the situation was serious, but it has come down a bit now. As of the time of filming, the exchange rate is 1,417
As of December 5th, it's 1,401.
Isn't the exchange rate settling down completely in the 1,410 range? I'm really worried about this. We talked about this on the show not too long ago, but you really need to have dollar assets. And it's not just this time. I'm talking about the dollar. I've been talking about it since it was in the 1,201 range. You absolutely to have dollar assets as a safety net.
There were a lot of lies like that. How do you save dollars? That's what I'm saying.
No, you just go to the bank. No, I want to go to the bank and open a dollar account. This is information that you can find by searching on Naver. There are dollar deposits and dollar ETFs, and there are so many ways to do it. Just look it up and search for it. So the situation in Korea is getting worse and worse. So the economic uncertainties have become more serious since Trump became president. And now, with the state of emergency, the political and economic uncertainties have grown so much that the credit ratings of companies and the country are now in jeopardy. That's the current situation.
It's really tough right now. With our economy in crisis, and even with both the ruling and opposition parties combined, it's still not enough. I really hope they can come together and overcome this.
Think about the people. It's really time for South Korea to come together as one. We've always said that we can get through this crisis. We've seen it during the IMF crisis. And even though Koreans often fight among themselves, when a crisis hits, we come together with one heart and one mind. Get through it well. That is why in 2025, if we can really come together as one in mind and purpose, work hard, and live our social lives with sincerity, I think it would be great to overcome these difficult situations.
Let's wrap up today's video here and bring it to a close.
I'll be back with another good video next time. Your likes, subscriptions, and notifications really help a lot, so I hope you can keep it up. It would be great if you could do a lot. Thank you.